speak?
Hello, can you hear
I
us?
can hear you, yes.
Ah, fantastic.
And we
Thank
can
you.
hear you as
And
well.
we can hear you. The agenda pack with papers for this meeting is available via ModGov or directly from the council website, from the link which was sent out to members. When I invite someone to speak, could you clearly state who you are for the benefit of anyone who is listening to the meeting so they can identify who's speaking? Can I also warmly welcome any members of the public who are joining us today? I'm not sure we have any members of the public joining us today. The meeting is recorded by the council and will be made available to view online. Finally, as agendas are now viewed electronically, could I kindly request that members and officers refer to page numbers from the published agenda pack to assist all present in finding the appropriate information. And I wonder, Debbie, do we have any apologies for absence?
No. Oh, we do have Alison Wire to apologise to Anton.
Okay, so Alison, is she formally a member of the board yet, or?
Yes, that was approved at full council last week, Simon? Full council last week.
Fantastic.
And I've also had apologies from Anthony White in that he will be late. He will be joining us, but he will be late.
He will be, and probably then online, but we are correct. So, sorry?
I think he's coming online.
Let's not get there. Right, any additional declarations of interest? I know anyone who is an existing member of the local government pension scheme has already lodged that interest. So any additional members' interests that we should make a note of? I'm not seeing anything and nothing online. So the minutes from our last meeting, I will formally approve them at the next meeting. But I wonder, Anton, has there been any matters arising from the last meeting?
So the minutes have not yet been produced. I don't recall. I haven't listened to the last meeting in the last week to check any matters arising. I don't recall anything that wouldn't be covered on an agenda item anyway, that specifically was raised at the last meeting. So if there is something that comes out of the minutes, I'm afraid we'll have to deal with that at the next meeting.
That's fine. It's just that, 6 months down the line is quite a long way if there was anything that we ought to make ourselves aware of.
It's just if there was a specific piece of information that was requested, that it'll have to wait until the next meeting because I can't remember what it was.
Yes. Fine. And I'm not seeing any hands raised or anything online. So then we move on to public question time. And I note Sigurd by his absence this time. So we don't have Sigurd in the room, and no questions from Sigurd, I don't think.
No, and he does know how to get here because he was at pensions committee a few weeks ago.
Sorry, and he specifically told me he's not going to be here.
Yes, me too. I'm just amusing myself that I'm noting Sigurd by his absence. So then we move on to the big part of our agenda, which is reviewing what went on at the most recent pension fund committee's meeting, which happened on the 13th of September. So over to Anton, if you wouldn't mind.
As ever. The normal mostly the normal papers. So starting with the review of investment performance. I don't recall any particularly interesting conversations or questions regarding it at the time. As ever, it's a extremely long paper. And I'm just going to make some brief remarks similar to the ones I made in the committee meeting. Looking at the combined fund, the section 16 that is on page scroll down. 33 of the committee's meeting pack. So the fund made a return of 1.3% quarter, which is broadly just about in line with the 4.6-ish that is in the actuaries' requirements. Through the period, there's been a lot of volatility. You tend to get sort of markets get a bit of a funk on, and everything goes down, and then they get happy and everything goes up. Since I do probably have the benchmark figures for the following quarter, and I can't remember what they are, having calculated them on Wednesday.
What's happened since Wednesday?
Just a second. Just give you a brief update as to, so the benchmark figure for the quarter to the end of September was 1.2%. So broadly a similar level of performance is likely. And as I say, we're just about keeping track with what we need to, with 6 months now till the valuation date. Although the actuary uses data for 3 months either side of the valuation date rather than a point figure on the 31st of March next year. So effectively, the period that's relevant is 1st of January to the 30th of June.
Right.
They will take sort of an average over that period.
Okay. Okay. So if there was a huge anomaly in the markets in that time, would they take that into account, the fact that something really unusual had happened in that time?
So they would
I'm
just,
thinking about the Liz Truss
yeah. So
debacle, for example.
So as that would be part of the 6 months.
Yes.
Then yes, it would be part of the data set and it would be included. But better that it's part of a small part of 6 months
Yes.
rather than all of
Snapshot.
one day.
Yes.
Which is effectively is the alternative is to just use whatever turns up on the 31st of March.
Yes.
I mean, yeah, we didn't have a valuation in 2020. And actually markets bottomed on about the 22nd or 23rd and started recovering.
Yes. Yes.
But obviously, if we've been in that initial COVID period where markets were off, I think 15 to 20%
Yes.
for about a week,
Yes.
that would be unfortunate and would
Yes.
skew the results quite
Yeah.
heavily. So smoothed over 6 months
Is better.
is better.
Yes.
And as you say, if you get something that causes a market schism over 2 weeks or 3 weeks, then it will impact them, but not massively.
Yes.
If
And
you
it
get,
would be explained.
and it
well,
would be
yeah.
explainable.
Yes.
If you got a more direct trend, so if we looked at 2022, Russia invaded Ukraine in February, I think,
Yes.
and markets then did deteriorate quite considerably, actually through to the end of June, pretty much.
Yes.
With worries about sort of the financial impact of that. Certainly, inflation came through quite quickly. Oil prices spiked.
Yes.
And so you had various effects. So that would, if something like that repeated, then that would impact where we ended up. But that would be reflected in our asset values at that time.
Yeah.
So,
I mean, there's always a crisis. I mean, that's.
happening at the moment, isn't it? Because
Yeah.
oil prices with Iran now.
Yes.
Yes.
Yes. I mean, well, it is ever thus. You bounce from crisis to crisis.
And this is why, every year I have a conversation with external audit about whether period between the financial year end and the point at which the audit opinion is issued, yeah, whether I should make any post-balance sheet events. And in terms of markets, it's like, no,
Yes,
because
So,
even a 10% drop off in that period is statistically not so unlikely that you would remark about it and
Yes.
count it as a post-balance sheet event.
yes, yes. Okay, good. I had the benefit of going to the Investor Day, Brunel's Investor Day. I know, because I was sitting next to Anton.
Yes.
And Rod was there too. And I had the benefit of being able to ask a question about the Institute and Faculty of Actuaries had issued a risk warning, a risk alert in June about the extent to which climate change had been factored in to the markets, and how could the markets know when nobody knows? And that was very well answered by our new chair. Is she the chair?
Yes, that is the new chair of the board of
Brunel.
Brunel Company.
Yes. So will the actuaries, when they are doing their valuation, how much notice will they take of their institute's risk alerts?
In pure financial sense, probably quite limited. And so you're absolutely right in that how can the market know the impact? But the market should be the best collective global guess based on all the
Yeah.
currently available information.
Yeah.
So it shouldn't be that far wrong. And obviously, the actuary does get to redo the valuation every 3 years
Yes.
because that's what's in the regulations.
Yes.
And in theory, we could request an additional inter 3-year valuation. That is, if we felt something had systematically altered events and we didn't want to wait
Yes.
for the remainder of the 3-year period to unwind, then we could just get them to do one at any point. I would suggest that would require something
Big.
Very sizable.
Yes. Presumably there's a cost to the fund of doing that.
There certainly is, yeah.
Yeah.
Evaluation does cost money, yeah.
And ballpark, what sort of?
I think it's something in the region of £60,000.
Okay, so it's not something that we would do on a whim.
No, and well, and it, again, bearing in mind that next year's valuation, I think, is my 8th. It's my 7th, or is it my 8th? They do seem the 3 years comes around really, really quick. Especially as it takes them a year to actually basically do the work.
It. Well, if they're looking at 6 months of data,
Well, and
they've got to wait for the 6 months to be up.
yes, so they have to wait until June
Yes.
for some of the data. Actually just cleaning the data and producing the member data file for them, it takes a number of months. So it's usually they don't actually get all the information until August or September. And then they actually it probably takes them about a month to do the calculations, to validate them, check them, and all stuff like that. We'll then get provisional results September, October, but they won't sign them off formally, usually until the last week of March.
Yep.
Because on one of the occasions, I can't remember now, was it 16 or was it 30? Can't remember. The government changed the regs after they had produced the formal valuation document, and they had to reissue it. So now they won't issue it the formal document much more than a week before it
Yeah,
legally has to be
Yeah.
issued, because they don't want to have to redo anything if the government move the goalposts at late notice.
and in my position as smaller employers representative on this board, that causes Freetown Council, who I am a councillor for, enormous problems, because we've obviously, as all the parish and town councils, will have set their budget by that point. So then if the valuation means that the amount that we have to contribute to bring us up to fully funded, and we've not budgeted for that. So those timescales are really quite problematic.
So usually I provide the informal results to employers in early January,
Yes,
and that, although awkward,
yes,
because most of the planning for the budget is taking place,
yes,
it is before
yes,
formal budgets are signed off.
yes.
And yeah, ideally for Somerset Council, I think they would want the answer in August. I mean,
Yeah,
yeah, that's when the most amount of budget work is done, is August, September,
yes,
because first drafts of budgets, or no, let me correct myself, options around budgets for members to choose from, usually between unpalatable and very unpalatable,
yes,
usually takes place sort of in October.
yes,
Because otherwise you just can't, and the document, the numbers need to be pretty much set by Christmas.
Absolutely, yeah,
In order to produce the papers to go through the various committees and everything for full council in February. So it's never ideal,
no,
but
No.
it is what it is.
it is, yeah. Well, we just have to
And-
live with it, don't we?
Yeah, and we will be able to give some elements of a direction of travel.
Yes,
I mean, yeah, within the committee papers, on page. Sorry. Sure. 38, under section 16.10. There is the sort of quarterly update from the actuary. Now, you have to bear in mind that this is effectively taking into account market movements, but little else. So if a employer's situation in terms of a significant change in their employee base, that won't be taken into account. The actuary wouldn't have included changes to their mortality assumptions based on newer data, things like.
Yeah.
But based on pure markets, you know, they're saying, I've actually left in the report, I've just realised 31st of March 2024, that isn't correct. That's the actual date was 30th of March 2024. The valuation position was 93% compared to 95% at the 22 valuation.
yes,
So not dissimilar.
no,
And in their data, they are now including a projected whole funds primary contribution rate. But I didn't include it in the report and I can't remember what it is. And because I have to go onto their website and sign in and everything, it'll take me too long whilst talking to do that.
don't worry, but I think bearing in mind the way that all of the employers who make up the employer base, bearing in mind their budget setting schedule. Having the valuation come at the end of March is really problematic. But so
Well, as I say,
anything you can do.
The,
Yeah, it's
the
great.
information does go out earlier than
Yes.
that because, and that's just the formal signed
Yes.
document. If employers are willing to trust what I tell them a bit earlier, and it's never changed in that period.
No.
It could, but it hasn't in the past, then that's what you run through. And do you know what? Actually, councils have got it easy because for schools, their financial year end is August. And so they get to change mid-year.
Yeah, even worse. for
Which
them.
is even worse. Yeah, they're halfway through a budget year.
Hi Shirley, do you want to speak?
Yes, sorry. Obviously Anton knows all the ins and outs of the valuation. What I was just going to say was in our November admin employer meetings that we're holding in November, and we're just sorting out at the moment, we are having the actuary join us to just talk to employers about the importance of having clean data and receiving it in a timely manner so that we can get things moving as quickly as possible for the valuation time as well.
Oh, that's useful. I hope he's not given too much of a hard time.
Likely to be true.
Sorry.
And similarly, assuming my workload ever allows me to get my brain around it, we should be having an employers meeting where, again, employers will have the opportunity to ask questions around that. And most importantly, we'll aim to do that next year as well. Definitely try and get one in next year in sort of November or December.
Yes.
To allow the actuary to give a heads up of what certainly the whole fund results are like. Because usually the way it works is I will get an indicative whole fund number quite early.
Yes.
So probably end of September, early October. And then they'll start working their way through the employers.
Yes.
So we can usually give a whole fund result, which will give a direction of travel.
Yes.
For individual employers. Now, I do have to caveat that individual employers can be significantly different, because if you, especially town councils that tend to have quite small employer bases, you can get quite odd things happening because you did have 2 people in the scheme and you've now got 4 people in the scheme.
Doubled the size of the scheme.
And so I can't avoid the issues that can face. But as a scheme, as an overall picture, we can get a message out relatively early.
So maybe we need to think about that in our meeting plan, in our future business, that if we're going to be having an employees meeting, because I'd certainly like to be there. I think that would be a good thing for us to attend, anyone who's able to.
And commonly, we would also ask the actuary to come to a pensions committee meeting. Usually it would either be the December 25 meeting or the March 26, but it would probably be the December 25.
Yeah, so we'll note that and try and get that into our business plan. Okay, so I sort of made us go off at a bit of a tangent, but
unless there's other questions, I don't have anything really else to say about fund
investment performance. Okay, so the next thing that the committee covers,
administration. So I'll let Shirley take you through the administration paper that was sent to committee.
Hi,
Good morning. Oh, hi there. So this report commences on page 41 of the committee's pack and concentrates on the quarter up to the 30th of June. Within that quarter, the team achieved 91% in target, with 96% recorded on the high priority cases, and this is against the disclosure regulations. They also received 27 compliments. And on page 44, Appendix A provides the detailed breakdown of the performance for this period for the Somerset Fund. as well as showing the statutory disclosure regulations, it is also now showing the internal targets where applicable for your information. We have also included a graph showing the monthly trend and analysis on the percentage of the high, medium and low priority cases completed within timescales since June 2022. Appendix A is followed on page 47 by Appendix B, which is highlighting the longer term performance of the Peninsula Pensions for the Somerset Fund, and looks at the 1st of July 23 to the 30th of June 24. The bottom chart shows the number of the remaining tasks outstanding to be actioned, and those that are awaiting information from third parties, be that either the scheme member or the employer. And we therefore put those cases on reply due, awaiting the relevant response. We then have Appendix C, which looks at comparing the work that we've received over the previous 12-month rolling period against the same period in the previous year. And this chart is currently showing an increase in demand. The committee...
Shirley, can I just pause you there, Shirley?
Mm-hmm.
So initiatives like pay your pension some attention, and all of those initiatives that go out on social media and the Pensions and Long-Term Savings Association do you notice that in your workload peaks? Is it having an effect?
Definitely this year we have effects with, like, when we send out the annual statements, that makes an impact on queries that we receive, and telephone calls, etc., that come in. What we noticed this year, because for the Pension Awareness Week, which sort of like was at the commencement of the Pay Your Pension Some Attention campaign, although a separate campaign, which always confuses me slightly. We did 5 employee sessions that week on the Monday, and we had over 700 members attend those sessions, and they then obviously asked questions at that point, but we then had feedback surveys of approximately 240 people out of that 700.
That's really good.
Yeah, so we've gone through those, looking at what we did well and what people thought we could maybe improve on. And we also, within that, there were about 120 cases where they wanted a follow-up of some kind. So the team are sorting that out at the moment, either arranging to have a further chat with them, or are able to sort of like send an email response back to those individuals. So it definitely worked. This year we did more as a fund. We arranged those talks, if you like, rather than that. So yeah, we definitely saw an increase.
Is that something that you plan on doing on an annual basis?
Yes, and we plan to do a bit more as well, and we'll be talking about those at the November employer admin meetings.
Fantastic. Because I personally do a similar thing at Primtown Council, and I know that more and more people are interested in their pension every year, but people need to come back every year. It's like they remember the information while they're in the room, and then as soon as they leave the room, other things take over. But people are building an understanding of their pensions, but pensions are so complex that it's like you have to keep telling them the same information, and eventually it sticks. But then there's always new people coming in that you've got to start that journey with again. So well done, keep up the good work, and I'm really applauding the fact that you've managed to get 700 people interested in their pension. Well done.
We do also have like employers seem to be contacting us, arranging extra meetings, be that online or face-to-face meetings with their employees as well. So that is also, we're seeing an increase in demand for that type of information from us as well. So
Yeah,
I think there's
good.
more.
Well,
And I'm expect that you did, Anne, but I'm not sure with the others, that for the pension, Pay Your Pension Some Attention campaign this year, Gemma Collins is the face of
oh, right.
the campaign. It's quite funny. I actually prefer her to Timmy Mallett's
Yes.
version last year. But yeah, so she.
Yeah, that's good. I think the more we can do to get people interested in the shape of their retirement income, you know, whatever that is, you know, whatever part the local government pension scheme plays in that, so that people are able to plan their retirement and also are less likely to be scammed because they know the value of their defined benefit pension scheme and they know the part that it's playing. So yeah, good. Keep up the good work.
Sort of linked to that in a slight way is that the committee at the meeting did ask us for a breakdown of the total number of transfer values paid out of the Somerset Fund, and including the amounts paid and to whom. And transfer values, you know, is one area that scammers do try and hit. Alexander Thompson, in our technical and compliance lead, is looking at providing this information to them. The report also included the update on employer movements, new employers, academies and cessations, and it also states that we're going to provide a full update regarding McLeod at the next committee and board meetings. So for Christmas.
McLeod still rumbles on.
It's a nightmare for administrators, if I'm honest. But yeah, that will, I expect Rachel will give a full update on that at the next one. With all administrators across the country are struggling just with lateness of information and HMRC and etc. guidance coming our way. We have also provided links to the additional information relating to the TPR data quality score that had previously been provided in Q4 of the 2023-24 information. So you've now got a link to show you the differences between common and scheme specific data and really what the TPR are after. And the report also mentions about the cybersecurity meeting, which has now taken place. I attended and I believe it was well received, but Anton may be able to add anything about that on from his viewpoint. But other than that, does anyone have any questions?
Thank you, Shirley. I don't have any questions. Oh, other than I know you in your new policy, you have the idea of potentially being able to fine employers if they're late with their data. Has that kicked in yet? And is there anyone that you're thinking about imposing those fines?
We haven't fined anybody yet. We have had some meetings with employers about their data and have been working on them to get things improved with that employer, and that is working. Rachel does want to meet with me soon to look at employers and to see whether we should fine any. We still have leavers that haven't been completed for cases that were pre-April 2024. It's not as bad as 14, sorry. And so whilst it shows about 800 cases in total. That's across both funds and all like 400
Yes.
employers. So we have to detail down. We did have a stumbling block in that our audit team who were sorting out a employer performance report for us, a full one looking at what's been completed, what's outstanding. They've been delayed a few times, so we have we actually spoke to them last week and they promised us it was basically ready and ready for me to use, but I haven't had it yet.
Okay.
So but
Okay.
yeah, so maybe next time we'll
It,
be able to give you a fuller report on that, Anne.
I think that would be useful at some point to know, you know, you've got that sanction in your back pocket to use. And what would be interesting to know is how often it's used, how often you have to resort to that. And whether, you know, having that as a last resort is actually causing people to get
It
better
has,
with their data so that you don't have to resort to that.
yeah, certainly once it was introduced and even the lead up to it, more and more employers have come to us asking how their data is,
Yes.
and that includes those that have actually instigated payroll providers to be our main contact. And although
Yes.
we copied them into emails we sent to payroll providers, they weren't fully aware of delays that were occurring with
Yes.
those providers.
Yeah, I think, you know, the idea of carrot and stick, you know, do everything you can to encourage them to get their data up to date and timely. But always you've got that sanction at the end. But that's great. Thank you, Shirley. Anyone else? Any questions for Shirley? Thank you very much, Shirley.
Thank
Welcome
you.
to stay if you want to, but otherwise,
Okay.
Happy Christmas.
And to you.
So moving on with the papers then, the next paper is the committee's work plan, business plan. But with committee, I often bring up the general sort of work-related issues within us. So a couple of things I'll just update you on is firstly, the audit is almost complete. It was almost complete when I sort of spoke to committee, but it's almost complete now. We were due to take the external audit findings paper to audit committee on the 30th of September, but for absolutely not related reasons, that meeting was cancelled. I believe it's now going to an end of October meeting. I think there is some talk of that date changing again, so but it should go to the next audit committee whenever that happens. And I've seen a draft of the outturn report, and I don't think there's going to be anything too exciting.
Okay.
There was one finding that moved, I can't remember how much it was now. I think it was £10 million between realised reserve returns and unrealised returns.
Okay.
But that has no other impact on any other part of the financial statements. It was just a reclassification between the two.
Okay.
That was not in the annual report version that went to committee because it was brought to light by the auditors after I had done the papers, but is in the version that was provided with your papers.
Okay.
Also, within their progress report, I said we would be starting work on the investment strategy statement shortly, and I still haven't started that, and that will start with an informal training session for committee and board. I think in all likelihood, it's quite likely that we will slip a quarter on that timetable. So instead of aiming for sign off in March, we may well aim for sign off in June.
June, yep.
And I might refer back to that in a second. Because the other thing that I raised under this report as an item of any other business pertaining to this report, because it was a good place to talk to it than any, was the government's latest consultation,
Yes,
which had been advised to us, I think after I finished doing the papers, and the deadline for papers, and the deadline for submissions was the 25th of September. As board will have seen, because they were included in all the
Yeah.
emails, committee confirmed to me that they would like us to make a submission. They gave me a fairly clear view of what they would like that submission to contain. And I drafted something that was then circulated to all of you. I don't think I did circulate I did circulate the version that went in, I think was the last version I circulated. I'm struggling to remember now because there was two. Yes, I put out two, but there were about 3 or 4 versions as I was working through it. And that was submitted to HM Treasury
okay,
last week. I also had a meeting with my counterparts within the Brunel Group funds, a meeting with civil servants from MHCLG and Treasury on Wednesday of this week. Largely speaking, they were asking questions and clarifying our views rather than giving out more information themselves. The one thing they did indicate is that there is likely to be some sort of update from government in response to the consultation in the autumn, but that is likely to be very high level, very sort of initial responses type thing. And that the more substantive sort of response to the consultation is likely to be in the spring. Which may mean that there's an advantage to us dropping the timetable for our investment strategy statement by a quarter, because that may allow us to, if the government is prescriptive about anything, or even if it's keen to
yes,
encourage something,
infrastructure investment,
or whatever,
yes,
then at least we may be able to sort of add
Yeah.
that as a last minute thought, last minute discussion as to whether we want to make any changes to that investment strategy statement or deal with it as part of a later iteration.
How often do we review the ISS? Is it 3 years?
So
Or if something happens?
we are free to do it at any time. And so if something happened that made the current iteration not fit for purpose, I would suggest that would, to committee and board, that we probably ought to go through the exercise again, even if it was light touch. But the regulations indicate that it should be done every 3 years at least.
Yeah.
But that is an indication rather than
A hard and fast rule.
a hard and fast rule.
Yeah.
And our last version was signed off at the March 22
Yeah.
committee. So we're close enough. And
Yeah.
I think part of, because last time we did, it was 4 years in between. But we had always said that we wanted to
See the effects of pooling.
see
Yeah.
out the transition and reach steady state post-transition before we redid that.
And I think anyway, we can probably see the runes, we can see that the direction of travel.
coming out of government is more pooling the better, and pooling, the better. So probably that's going to be the direction that they nudge pension funds towards. Whether they make it thou shalt pool, or whether they just continue to nudge.
So there's a couple of things on that, in that they're definitely keen on further consolidation, but they won't define that as to whether that is simply making sure that everyone pools effectively and sort of broadly speaking all of their assets, or they want some other. There's definitely been talk around whether they're going to start talking about consolidation of the number of pools or individual LGPS fund mergers. Have definitely both been things that have been rumoured. I think it would be as far as I would go. And the civil servants we met in the week were very keen to emphasise that no decisions have been made, and they are just in information gathering mode at the moment. So we will have to see. In the current version of the investment regulations for the LGPF, there is provision for MHCLG to take control of the investments of any fund they feel is not investing in a correct manner. I'd have to look up the exact wording, but it is extremely broad. My understanding is they have not used that power at all currently. But within the regs, there is effectively there is the provision for government to be hard-handed.
Yeah.
If they wanted to.
Yeah.
So from a regulatory point of view, they already have the tools if they wanted to use them. I think they are rightly nervous of going to that slightly nuclear option.
The pressing the nuclear button. Rod.
Yeah, and just very quickly, what sort of announcement do you think will be made in the budget about this? This is the area that concerns me a little bit because, obviously there's the committee and ourselves, but members of the obviously contributors or the recipients of the pension. I mean, I'm sure would be concerned about changes that have been meddling by government. I think they would be very concerned about it. And I'm just wondering how they'll address the matter when they come to the budget, whether they will even mention it.
So I think it's very unlikely that Rachel Reeves at the dispatch box will refer directly to the LGPS. She may make some statement about pensions. My personal interpretation of what was said on Wednesday was that any statement by government in response to the consultation is likely to be later than the budget. And it needs to be borne in mind that there have been two specific budgets I can remember where the Chancellor made no reference to the LGPS in Parliament during their speech, but there were then elements in the official document that comes out that's God knows how many pages long.
The blue book or the red book or the
whatever it is.
book.
It is. There were passages in there. I am very confident that there is little appetite in government to change the benefit structure or contribution rates of employees in the fund. So in terms of direct impact on members, I think it's unlikely there will be anything significant. Impact via what government may or may not encourage or direct in terms of investment. I mean, again, in theory, it doesn't impact the member because they are guaranteed the benefits that are stated in the scheme, and the investment performance doesn't drive those benefits. It will be what it is. And until we see more, we'll have to see where we get to it. And, you know, the Brunel group of funds is relatively well aligned in stating that we believe that Brunel has been a relative success, both in a sort of relative to where we were and relative to other pools, and that the best thing government can do is concentrate on those pools where perhaps progress has been less visible and leave us alone.
Or just use the Brunel model for the rest of the country.
Well, and also, whilst recognising why and how they want to improve UK pensions investment in UK, because it's, although the LGPS will be asked to do something or encouraged to do something, but again, the emphasis we felt is very much on, well, we are doing this stuff to some extent. But Brunel produced a figure, I think it was something around 23% of the funds they managed are directly UK invested by one definition or another.
Listed on the UK stock market.
Well, that, obviously that is one element, but then there's also, you know, we've got a 10% allocation to UK property, and that is
Yeah.
all UK investment.
Yeah.
And yeah, there are various other strands. And so we said, well, we are doing this. So if you want to be more precise, but we are doing it.
Yeah.
And also that we very much feel that government providing incentives for supporting UK investment through guarantees or whatever would be far preferable, i.e. carrot,
Yes,
to thou shalt invest and stick.
yes.
But we'll, you know,
We'll wait and see.
We'll wait and see.
But I think, I think the direction of travel is becoming clear, Great, so, next on the committee's papers.
Scrolling down.
Yeah.
The finance and membership statistics update. So there wasn't a significant discussion about the membership statistics. There is a little bit of a trend at the moment in the number of active members reducing. That is probably linked to Somerset
Yes.
Council reducing its employee headcount.
Yes.
And I would expect to see sort of a little bit more of that through the second half of this year through to March next year.
Yes. Are the number of Somerset employees, is that the vast majority of the fund? I mean, how much?
It depends what metric you use to define how much Somerset Council makes up of the fund, but it's somewhere around the 60% mark.
Okay.
So it is.
Yeah.
But significantly.
The majority, yeah.
And then we had a conversation around the Q1 outturn. And most of the conversation there was around me getting used to the new finance system,
Yes,
How it-
Microsoft something or other. Yeah.
Microsoft Dynamics 365,
Yeah,
and how it timestamps information.
yes,
And so what I should expect to see out of it in terms of what data will be in each quarter or not in each
Yes.
quarter. And I probably need to refresh my profiling of the year's contributions and benefits payments, more than the actual numbers themselves.
yeah,
Because if you look at where I'm expecting something different through the year, what you can actually see is that I've changed the projected outturn for lump sum on retirement because we're already seeing a higher level of that. And I know that is a cohort that took voluntary redundancy in the spring that have been leaving over the summer and autumn.
yeah,
And a not insignificant portion of those were already 55 and therefore entitled
Yeah.
to immediate benefits.
yeah,
And a portion of those will elect to take some of that in lump sum.
yeah.
And depending on how long they've been in the fund, maybe
Something,
Required.
yes, required to take lump
some of
sum.
that as
Yeah.
lump sum.
Yeah,
Also, the amount of value of transfer values paid out, again, is already showing signs of being ahead of budget. And
Okay.
again, that again seems reasonable and sensible for similar reasons. So employees leaving Somerset Council and
going
probably
to a different employer.
more likely than not going to another government
Yeah,
scheme. So either a different council or migrating to the NHS
Yeah.
or civil service somewhere or something like that. So you would then expect that to see more transfer of that.
Yes.
And so I've increased the budget for that. I've increased the expected outturn for investment management expenses. That's mostly on the back of actually seeing the 23-24 full year actual,
yes,
which I hadn't seen at the time of drawing up the forecast. And especially as a significant portion of that figure is actually included in the accounts after the year end.
Yeah.
Because it's data from the transparency reports of fund manager fees and transaction costs, etc., within the fund.
yes,
So that's accounting treatment after the year end, as opposed to invoices invoiced through the year.
yes.
And that makes up a bigger proportion of the investment management expenses.
When
And
we're looking at the investment strategy statement, and I know we will look at the costs associated with a particular investment. So performance after charges. So
Yeah.
we always look at performance
after all
charges. But presumably all of those charges we can factor in. So we can look at the in-fund costs, but also the transaction costs. Can we add all of that in when we're looking at, so we've got a proper view of how much it costs?
So in terms of performance numbers, it is after everything.
Yes.
So, yeah. So that is, it's all included, as it were. In terms of transparency, so there is a table in the annual report that breaks this all out.
Yes.
In theory, I have that data for the funds we invested by individual area. for the Brunel stuff.
I think you've answered it because you've said the performance is after all charges. So
Yeah.
so we can be confident
So,
when we're looking at that,
And especially so the majority of Brunel investments, what we actually invest in is a wrapper,
yes,
some sort of legal structure
yeah,
that holds all the
an
investments.
OIC or a something, yes.
Most of it's an authorised contractual scheme,
Yeah,
with a significant portion then being life insurance sort of type
yes,
funds, and then limited liability partnerships.
Yeah.
For most of the private equity. And because all the transaction fees and everything happen within that vehicle.
yes,
And all the costs are paid for within that
Yeah.
vehicle.
we don't need to dive inside the
The
wrapper.
performance has to include all
Yeah.
of that.
Yeah.
But as I say, I do have a sheet. So the way I get the information for the annual report is that I get literally a sheet, well, it's an electronic sheet, but if I bothered to print it out, it would be 1-page piece of paper for each fund
Yeah,
that has a list of categories and a number next to each one
yes, okay,
with a value.
okay. So
Um,
if we wanted to do a deep dive, we could.
Yes.
Yeah.
But I would suggest,
There are
That-
other things we could dive into.
yeah, that it's not going to provide that much more enlightenment
No, it's data, not information. Yeah,
to some extent.
yeah. Simon,
Just Anton, going back to the pension fund projection. The lump sum on retirement, that's quite a difference there. Is that because more people are now taking the whole amount of their pension as a lump sum? Or is it or restructure, meaning more people are leaving at the moment?
So the way the lump sum works when someone retires is if they've got pre-2008 service, they are required to take a portion of that in lump sum. Then across all of the pensions they have, be that LGPS or others, so if a person's got other schemes as well, they are entitled under HMRC tax rules to take 25% of their total value of all of their pensions as lump sum. It's an individual decision. I certainly don't see the data as to that granularity to be able to determine whether people are choosing to take the maximum as a lump sum or not. And I would suggest it's likely to depend on partly their personal viewpoint and partly their personal financial situation. If you've still got a mortgage, you'd probably want to just get rid of it and get a lump sum that will allow you to get rid of it. If you don't, you might take a different view.
It also depends on your tax.
Yeah, and yeah.
Tax-free lump sum, sorry. Not with the tax-free lump sum, because that's tax-free, obviously. But if you take the whole of your pension pot as a lump sum, which you can now, can't you?
No, you can only take up to 25%.
Yeah.
You can,
under triviality rules, I think you're thinking about triviality.
no, there's two parts to
Yeah.
that. So one, there is something called triviality. So if you've only got a pension that's worth
Less than 30,000, I think.
something like that, you can just say, look, just pay me the lot,
Right.
rather than faff around with paying me £3.50 a month the next. And similarly, there's for those that are small, they can elect to have it as a single payment a year rather than a monthly pension, because
And-
again, rather than get £5 a month, you get £60 once a year.
Are there rules as well about, less than 2 years service?
If you've got less than 2 years service,
You get your
you can ask for a
contributions
refund, but that's not at retirement decision. That's at the point you've got to do it
Leaving,
when you you've got to leave the scheme with less than 2 years service with that particular role. When you are able then to transfer out your pension to a DC scheme and then choose how you take it. So you can take it in chunks rather than as a regular pension. But it would be beyond the original 25%. It would then be, those lump sums would be taxable.
But that's in a defined contribution rather than.
Yes, so you would have to transfer your pension out of the LGPS to a defined contribution scheme, and then it would allow you that flexibility.
And that's what is very highly regulated, because it's unlikely to be in the member's best interest to do that
Financially.
Yeah.
And lump sum commutes, I think, at £1 per 12. So if you
Yeah.
take £1 of lump sum, you lose
No, if you take
£12 of lump sum,
you
you
lose
lose £1 of pension per year for the rest of your life. So
Affect your spouse.
do you know what? That just floated into my mind seconds before you said it. I
Yeah,
presume it does because it reduces the spouse's, the widow's pension that would be payable to spouse after death. Would be based on a percentage of the pension in payment, not the original
Pre-commutation.
or pre lump sum election decision. And so you can argue, if you think you're going to live 12 years, you're better off with the pension, but then you've got to take into account the fact that the original lump sum is tax-free, and then you've got the decision of what you do with that lump sum and the financial benefits. So it's,
and your pension will go up with inflation.
Pension,
Once you've got your lump sum, that's it.
Yeah, so it's too complicated to calculate, but generally speaking, if you think you're going to live certainly much more than 12 or 13 years, you're probably better off leaving it in pension.
Well, and
Bearing in
Anthony
mind,
says if you've got debts that you want to pay, then yeah.
Yes.
and the other thing to bear in mind, obviously, is that from the point you retire and start taking your pension, your estate will get anything less than you received of the first 10 years. So if you die within 10 years of first retiring, your estate will get the balance of your pension for those first 10 years. So there's only a sort of small window where you're worse off almost. But it is a complicated area.
It's just a very, well, it's probably a very vague question, but the situation with Rachel Reeves is she's talking about disparities, and she was talking about raising the amount of money from people's lump sum pensions. Now, generally speaking, that wouldn't apply to our people.
So if it's an HMRC change, so if they change the rules with regards to
It's purely lump sum payments I'm talking about.
so that lump sum, so if they change it from
25% to 20 or
to
something.
10, then that affects people in our scheme.
It will still
Yeah.
affect.
Yeah,
I-
it doesn't affect
It
the
will
fund.
affect poor, it's not poor people, but a proportion.
Yeah.
For poor people.
Bearing in mind that our average pension in payment is 4,600, I think it was this year. So the vast majority of our pensioners, assuming they don't have significant other pensions as well, are paying only 20% on a small portion of their pension.
Yeah,
They are not,
I think
they are
it's-
not heavily
It was
taxed.
between sort of 20 and 40%. And
Yeah.
it's quite a considerable amount if it does change.
Now, there is also a separate thing that's quite heavily being debated in the press as to whether Rachel Reeves will go after something. So if you're in a defined contribution scheme, then you can leave the balance of that in some way to your estate. And that is exempt, currently exempt from inheritance tax computations. And that may well change. That would, I'm not an expert, but my understanding is that that would not affect pensioners in our fund, because our fund does not work.
It's just, it's not clear.
So,
Well,
yeah,
now they've taken away the lifetime allowance. It's a way for very wealthy people to load millions into their pension fund, and it's outside of the estate for inheritance tax purposes. So it's a sneaky way that very wealthy people could
avoid inheritance.
avoid inheritance tax.
There are a number of other loopholes
Yes.
that the very wealthy exploit in the inheritance tax
Yes.
regime. And I think that's a debate beyond certainly
Yes.
my knowledge and the relevance of this committee.
Yes.
So just picking up Councillor Carswell's question, it is my presumption that the majority of the extra in lump sum retirements is due to additional retirees rather than retirees systematically taking more than it's historically has been the norm in lump sum. Because that's an individual decision, I think you would assume that cohorts through time behave relatively similar.
Yes.
Um,
Right, so the same issues like mortgages.
yeah, same personal issues recur. And that was all I was going to say about the financial projection. I suppose I should point out that we have got progress because we've actually now managed to get a Q1 number out of MSD, which is more than we managed last year. So we're getting there.
We must be coming towards the end of the committee's papers.
Shirley has added something to
Yes, I was
the
just going to
chat.
say this, I messaged there.
Oh, yep.
If a member opts for maximum commutation and reduced pension, it does not affect partner benefits. Apparently, it doesn't affect partner benefits. Thank you, Shirley. We're all wiser this morning.
That's interesting. That's interesting. So
But if they take a trivial commutation,
yes.
that will.
Okay. Thanks, Shirley.
There'll be no partner benefits if they take a trivial commutation.
Shirley, as you're still here, after the meeting has closed, I've got not a personal question, but a colleague's question about some admin that's appeared on the portal, and they don't understand it. Can you stay on as you're still here now? If you don't mind, that would be brilliant.
That's fine.
Thanks, Shirley.
Yep.
Disappears now.
Yeah, runs away.
Yeah. So that's clarified that point.
Yeah.
So then, review of the next paper was the review of the pension fund risk register. Obviously that's on your papers
Yeah.
as well. So, but there wasn't particular debate about that at the meeting on this occasion.
And we can deal with it now as well. I don't have anything about the risk register.
There is something in your paper. I just need to make you
Okay,
aware of,
fine.
so
We'll get to that. Yep.
And then the next item was the comms strategy statement, which you will recall we debated at the last meeting of the board.
Yes.
It was going back to committee as a sort of, now we've had all debates and everyone's had a chance. Unless you wish to make any further changes, please adopt. And they did make no further changes and adopted.
Fantastic.
And-
Progress. I love it.
And I can't remember, is that? So there was then, the only other matter then on their agenda was the annual report. But that again is on your agenda.
Yep.
Because now in the revised annual report guidance from SIPFA, SAB and MHCLG, as well as prescribing various changes to the layout and content of the document, they have specifically stated that best practice is for committees and boards to separately adopt the annual report.
Okay,
So it is now a separate item on your agenda for you to consider, and if you deem fit, formally adopt later in the meeting.
fine,
So that is the end of the committee's papers.
right. Then moving to our own review. Agenda item 6, our own review of the risk register.
Yeah, so the only thing I wanted to pick up is there's been some minor changes in the risk register. So there's been a couple of presentational things. So there was a box that said commentary following review, but we've also got a box saying sort of any other matters of relevance. So we've ditched the box that says commentary following
Yes.
review. We've taken that column out. And also we've picked up adding a mitigation under PF Admin 5, the vulnerability of stash issues. So there's a mitigation that it's been considered as part of the Somerset Council staffing structure review,
Okay,
which I still have scanned information on.
okay,
We had a partial reveal this week, which showed us which teams will report into which director.
okay,
But that's all it showed.
okay. Because I
And some
think,
overall figures around sort of the numbers of individuals and budget that's being taken out of
Yes.
each area. But that's not very granular. So those figures were for finance performance,
yes.
not individual teams. So
I think, in that review, I think Somerset has to realise that Somerset Pension Fund is a separate entity and is particularly vulnerable to staffing issues. Because there's a lot on your shoulders, Anton.
and yeah, as I've said before, that conversation has been had.
Yes, good.
But it's because I am my team has other responsibilities, which is Somerset Council.
Yes,
It's not as simple as saying Anton's team is not charged to the council, therefore the fund can have
off.
can have full discretion as
Yes.
to what they want. It has to be a more interesting
Yes.
conversation than that.
Yeah, it's more nuanced, I think,
Yes.
is the phrase, yes.
And so my understanding is that there will be a wider reveal on the 24th of October, which will then start the formal consultation process with unions and individuals, staff. And I'm not clear as to whether I'm allowed to have discussions with committee and board about the content of that during that period.
Okay,
And so I'm not sure whether I'm actually going to be able to tell you anything concrete at your January meeting or not.
well, we'll wait and see.
But at some point there will be a
Yeah.
reveal and we'll tell you what it is. And
Yeah.
if you're not happy, then you can tell someone else because it's not me.
It's fine.
The other thing I wanted to pick up is one of the things that someone had pointed out to me is that there shouldn't really be any risks where there is a difference between the current risk score and the target risk score, but not additional mitigation actions sort of being considered,
Yeah.
which is perfectly logical.
Yep,
And that's partly why I added a comment on that PF5. The only risks now where that is the case is the two risks around cybersecurity and data security. And so if you're comfortable to answer now, but if you feel you'd like to consider the question, that's fine, because I will need to have a discussion with committee as well and get a sort of grounded position. But effectively, my view would be either this cybersecurity meeting we had has given you sufficient comfort to lower the current score to the target score, or inherently, this is a risk that probably can't be mitigated further, and we need to increase the target score because the target is unachievable. And it's not necessarily as black and white as that. There is a greater nuance, but I'm not sure what other mitigation we can undertake to get from A to B. So we need that discussion.
Yeah, I'm fairly confident that we and our partners are doing everything that is reasonably practical
To do.
to do. There will always be new risks in cybersecurity. It's a bit like an arms race, isn't it, between us and the scammers? But AI brings its own issues, I'm sure. But there comes a point where we build such a fortress around our data that no one can get to it, let alone the members.
Yeah,
And
there is the problem that, ultimately, through the member self-service portal and through the employees of Peninsula Pensions, we need access to that data. And if you need access to it, you instantly create possibilities and risks.
people need to be able to get to their data and update it and change it, and people will make mistakes when they're doing that as well.
And use it to pay pensions.
Yes, yeah. I mean, that's my feeling, that there will be a risk. We've done everything we can to mitigate that risk. And either we just recognise that the risk is there. I'd be inclined to say, well, the risk is there, but we've done everything we can.
But are you inclined to say that you think actually the current score is still correct at an amber risk, with a likelihood of 3, and the target likelihood of 2 is not achievable, and therefore it is the target that needs to be amended? Or do you think it is?
I think the target needs to be amended. We probably could do more, but not practically.
Yeah, okay.
It's my personal opinion, but
I will take that on board, and obviously, as I say,
see what the committee
committee
thinks.
think as well, and then we will look to adjust the risk register.
But keep it under review, because this is an area that is rapidly changing, and with AI is probably, that change is going to even accelerate. So
One of the things I'll just fly out there is that apparently Somerset Council's risk methodology has been updated, and so I need to have a look at that and either make a call myself or bring back to you and committee as to whether to adopt that or stay with what we've got.
okay,
I suspect we will probably end up adopting it, and I
Okay.
suspect that it will be more a change in sort of layout presentation, perhaps,
rather than methodology.
rather than
Yeah.
sort of significant methodology, especially once you start talking about the individual risks that we have on the register. If there's no other questions on that.
Great, thanks, Anton. Business plan. Oh, business plan.
Yes. As ever, I am happy to add anything that you wish to the risk register, to your work plan. as I say, at the moment, you've got review of investment strategy statement in the work plan for the January meeting. I think it is very unlikely that a draft of that strategy statement will come to that meeting now.
So let's bump it now. Let's move it to the next meeting, which is March, I think.
April.
April.
And currently, you do not have any unusual elements of business other than that on your forward work plan.
So is there anything that people would like to do a deep dive on in January?
I'm seeing a distinct lack
Yeah.
of comment on that.
Was this going to be a meeting in January?
Meeting, yes.
I'm away.
Okay.
Like one weekend, that was the only thing I was going to say to you.
Please don't choose that
Yeah.
to do a deep dive on.
On something you're particularly interested in.
Yeah, yeah.
And please don't choose it as a meeting for a deep dive that you wish to inflict on
Yeah.
the rest of us
No, it's a
and have no interest in.
football match.
Okay,
Okay, well, we'll see what happens.
there's,
I mean, if something comes up if we've got 3 months, so
Yeah.
if something comes up between now and
feel
then,
free to let me know.
and something might come out of the committee in December, so.
Yep.
Yeah. But we'll, at the moment, I think, yes, we'll bump the investment strategy statement and then, to April, and see if there's anything we want to poke at with in January. So last item on our agenda is our approval of the pension fund's annual report.
Yes, all 260 odd pages of glorious information.
I cannot say that I have read that report, but my understanding is that report, a significant amount of that is a collection of all of our policies and strategies
Yes.
together. So we know what makes up the majority of the report, and that is one useful repository for all of those
Yeah.
policies. So that's why it's so big.
If you bear with me a second, I can probably give you a
Executive summary.
well, a rough figure as to what proportion is
Okay.
all the. I'm just trying to find the start of the first. So about 120 pages of it are all of the
Strategy statements.
et
Yeah.
cetera.
Yeah.
So, but that does mean that half of it is not.
It's not. Yes.
I think the accounts themselves, which is mostly tables,
Yes.
take up about 50 pages
Yes.
these days. I hark back to the wondrous days of the first of these I did in 2003, where the whole document was, I think it was 18 pages.
Yes.
But hey ho.
There we go. That's regulation for you.
And so the few things that I will draw your attention to and are mentioned in the covering report is, firstly, this is the first year of new guidance. I referred to it earlier from SIPFA, MHCLG and the Scheme Advisory Board collectively. Funds are expected to apply that on a best efforts basis for this year, and I have done that. But it will be compulsory for next year, and I may well look at getting a consultant, probably Barnett Waddingham, because they're already contracted and it's simpler to do a gap analysis for me.
Okay. Yep.
So look through this, look through the guidance, and tell me what you think we're missing.
Yeah.
And I may well say, no, that's actually, I have included it, but for various reasons, I've not included it in the place they have told
Yes.
us to.
Yes.
So for instance, there's a couple of things that, because now the order is prescribed
Yes.
and what you should include in each section is prescribed. But there are a couple of things that There are a couple of things that I've always historically included in the accounts and are part of therefore the external audit's opinion. And I don't want to move them there. I
Yes.
feel it is better that they stay in that place and are the external audit's work explicitly encompasses
Yes.
it, rather than move it to where MHCLG or someone else wants it in the
Yeah.
document. And in those instances, I do say, and this information can be found in the accounts.
That seems perfectly reasonable, and I think it's a good idea to have someone else look at it, just to sense check it and.
Yeah.
Yeah,
So that's changed, and as I say, the vast majority of the change is actually just taking what I did and putting it in a different order. But there are some extra bits and pieces, and there are a couple of things that, because they no longer either appear in the guidance, and I was somewhat skeptical of their relevance or benefit anyway, there are a couple of things that have dropped out. So that's the one thing. The second thing I will draw your attention to is what I referred to earlier. The audit is not completed yet. And also, the auditors, external auditors, will not provide their formal audit opinion on the pension fund accounts until they provide their formal audit opinion on Somerset Council's account.
okay.
Which is the same every year, and it's the same for everyone, and is deeply frustrating because the council's accounts will take significantly longer. There is now something, I'm not following it very closely because it doesn't desperately affect me, but there is now legislation that I think requires auditors to give an opinion by a backstop date. I believe that is the 28th of February. So we will get our opinion for the pension fund accounts at that point, I believe.
Okay.
So because there is a possibility that the accounts will change, because until audit finish their work, I can't be sure that they won't find something else that's sufficiently material that they request that we make an amendment. As with the pensions committee, I've asked that the board approve the document, but that there is a dispensation for the chair to approve minor amendments because of that. If there's anything more significant, we would bring it back to your January meeting. But on the basis that I have to publish the document in some sort of form by the 1st of December, it's best practice that you adopt it before that date, with or without caveats.
So I think that seems very sensible. If you're happy, if it's a minor amendment, if it's a dotting the i's, crossing the t's, then
Well, as I say, I think the audit is sufficiently advanced now that the likelihood of significant amendments is quite low. As I say, we did do that one change between the version that was available to committee, but I was able to tell them of the change.
Yeah.
And as I say, it sounds like a large number, but because it's moving between realised and unrealised
Yes.
gains for the year, its impact is exceedingly minor.
it's just moved from one pot to another.
Well, and actually, it's one of those things that's a frustration in that under the accounting code, it's not actually a requirement to split the two out, and many councils don't. But because I choose to be
You're doing
more,
it properly.
because I choose to be more transparent, I've had to make an amendment to it. So curse my transparency.
Rod for your own back.
Yes.
I think we can note that that has been.
You need to be formal about that.
I will propose that we adopt it. Simon seconding it, and we are unanimous.
Excellent, thank you.
I don't believe that we have any other business of urgency unless
Can I raise something?
you may.
I completely forgot to put on the agenda that you're supposed to reappoint the chair.
I know Rod has some concerns that we are not following our own rules in that our chair is meant to rotate. Are we breaking rules? Are we bending rules? Or are we all right?
So if you want me to actually get the terms of reference in front of me and quote you verbatim what it says, I will do so. I think it says they anticipate that the chair will rotate. My personal view is look, there shouldn't be a lock on the chair so that we don't bring it back annually, we don't have the discussion. But if the board themselves are all happy with the arrangements and the board themselves don't wish to either volunteer or force someone else to volunteer to force rotation, I don't think it's, you know, as long as it's explicit consent of the board that it is not rotating, I don't think it's an issue. I don't think
an issue perhaps with the element of consistency. I think perhaps to break it is probably not such a good idea because
well,
Anne's done a very good job.
one of the things that's so
Sorry.
quite a lot of the LGPS pension boards, it is my understanding, had chosen to make arrangements for an independent chair. And therefore don't rotate it. So it's not it wouldn't be unusual in a context of the wider LGPS community that we don't rotate our chair, because most of them don't rotate their chair, but most of them have specifically sought an independent chair rather than have it from within the voting membership.
Well, I am happy to continue, but I'm not going to stand to be a councillor in the next election. So I will have done 2 terms. I will have been 8 years councillor. I think that's quite long enough for me and the council. So we do at some point need to think about succession planning and someone else.
The
Stepping
thing I
in.
want to say with all this is there's a certain amount of turbulence, if you like, with the what's going to happen to us. And I think basically, obviously, these things will take their time. I'm rather hopeful that all these changes don't take place very quickly, because I think perhaps the government will probably need maybe 2 or 3 terms of office to actually attribute their aims of what they're wanting to do. But certainly at the current time, it's probably not a good idea to do it, bearing in mind what's taking place at the moment, because I think, you know, obviously somebody coming in new might, not be in the same position with knowledge that perhaps Aaron's got at the moment.
But having said that, as we said earlier in the meeting, we go from crisis to crisis.
I'd be quite happy to stand in the, in the background, if you like, if necessary.
And just for my knowledge, so I can anticipate these things, when is your term as a Froomtown councillor?
It'll be 2027.
Same as.
Yeah, May 2027.
Oh, so it's coterminous with
Yes.
Somerset County Council.
Yes, we can all be changing. Yeah.
Well, and in
Not Rod, because you're
yes,
Yeah, I'm
usually
You're retired.
I'm retired anyway.
the board at that point becomes more stable than the committee, because the committee is far more made up of Somerset councillors than the board. So yeah, that I shan't unduly stress at this moment. I've got at least 1 more year and possibly 2.
Yeah.
So and on the basis that will be a May change,
Yes.
I would suggest the October before that. So that would be October
Good idea.
25th. Yeah.
That's a good idea.
You would, although we will have the discussion next year, because as part of the terms of reference, it specifically says
Yeah.
it should be reviewed annually.
Yeah.
So, and apologies for forgetting to put it on the agenda. That that would be a point at which we
That
will.
would be a good
yeah,
idea, wouldn't it?
to
Yeah.
insist that at the October 26th, someone else picks it up.
Yes,
Right,
and then I can put my feet up.
we should have a vote, yes, to reappoint him.
Thanks. Thanks. Thank you. No, so vote of confidence. So I will declare that meeting closed. Thank you very much. But I'm gonna have a conversation.
Can I just clarify?
Which, yes,
Will there be a meeting in January or not?
Yes.
yes.
There will be. Could I request that, but could I let you know if I'm away? Because I would like to attend.
The date is already in the diary.